Bitcoin on the charts does not look pretty, but it looks normal. That's what I want to talk about in this video. Hit the subscribe and like on the way, and let's jump into the Bitcoin video. This is BTC on the daily chart. Wow. It has just been, the last week alone or so, going back here to June 7th, we have a dip of Bitcoin almost 40% total if you measure the wick of the daily. This green box that you see this trading in is probably the most important green box. And this is a green box I've been tracking since 2018 when I charted this chart. Many of you might be aware of this chart. This is my zoomed out long-term Bitcoin chart. The green box on this chart back then was this yellow line, the 786. And you can see Bitcoin from when I did this video all the way back here, 2018, kind of followed the trajectory, not perfectly. And here we are visiting this area. Now this 786 that I charted back then is in a different place on the chart, but it is here nonetheless. And the 786 I'm talking about is right here below Bitcoin where it is right now, just above $17,000. If you're wondering, what is a 786? What is a green box? This is what it is. It's the last bear market low to the bull market high, now that we have a bull market high to measure, and it's just a Fibonacci retracement. Your standard Fibonacci retracement in a 618 to 786 area. The 786 in terms of crypto, as I have gathered the data, is just that volatile move for crypto. You can do this on a zoomed in 6-hour chart or a zoomed out weekly macro chart. Here's this volatile retracement to the 786 for crypto, for Bitcoin in this case. We had a very similar thing happen all the way back here to the 786 in the last bear market. Now, the land of opportunity falls below the 786 in these bear market lows. And you can see 2018 bear market low. You can see 2015 bear market low. Bitcoin falling below and consolidating below the 786 for some time, I might add. It fell below the 786 in 2014 December, and it kind of got back above 301 days later. So it kind of gives you a sense. I'm not saying it's going to consolidate that long. I'm not even saying it's going to fall below the 786, but this is the land of opportunity. This is the opportunity zone on these Bitcoin charts historically. And I think what's really important to note is, things seem really bad, especially when you're just staring at a daily chart, right? Things seem really bad. But the thing to note is it's just really normal. Let me go back to the current Bitcoin chart. It's a normal move, right? And this is in the environment where traditional markets, you can see S&P 500 right now down, right? And potentially going to continue to go down. There is fear. There is this need for kind of a resetting on these charts. And it's going to happen. It's going to bottom out eventually. No one knows when. So when we're looking at Bitcoin, though, we can continue using this chart as a roadmap. It's exactly why I charted the chart that I did back in 2018. It's exactly why I tried to wrap my head around these retracements on the macro chart. The other thing to note here on this chart is, let me get rid of this so we can see a little more clearly. We are right now right around 750 days post the 2020 halving. Now, this bottoming out area for Bitcoin back in 2018, when it kind of was forming its bottom, was around 882 days post the 2016 halving. And then all the way back here in the previous bear cycle in 2015, Bitcoin was 777 days. So 777 days, 882 days. Now we're 750 days, right? Post the 2020 halving. And so again, another data point that suggests Bitcoin is in a very commonplace move. And I'm not this, I really don't want to sound like I'm offering hopium. It's data that is proving consistency in the long-term flow and trend of Bitcoin. Some might say, well, Bitcoin is breaking this 2018, 2017 all-time high. That's something Bitcoin has never done in a bear market, right? It hasn't broken a previous all-time high. But I will say this, Bitcoin entered into this bull market, this past bull market, with great velocity, and it got up there extremely quick. So with that velocity, we're getting a different move to the downside. There doesn't have to be 100% consistency, but that's why we use these indicators on these charts to really measure the consistency of Bitcoin. And right now, the move for Bitcoin is very commonplace. This is Bitcoin on the daily chart back in November 2018, as it's kind of falling really kind of a little bit more aggressively into this green box. And this is that Fibonacci that we talked about, Bitcoin approaching the 786 line before actually even falling below and forming its bottom. Now, if we go and we look at Bitcoin right now, it's just looking very similar thus far, right? Will this continue to tell a similar story? So here's 2018, Bitcoin falling into that box. And here is now Bitcoin in the box, right? In the last week, especially approaching the 786 line. Probably important to note the 786 line, Bitcoin, another 10% or so move from that area. So 10% move from that area, from hitting that area. And then remember, these previous bear cycles, Bitcoin has consolidated below. So there's absolutely not, it's not out of the equation at all. Bitcoin might fall below that 786 in this continued consolidation. And we get a 25% dip from where we are right now, testing $14,000, $15,000. Now, all that said and done, there is absolutely no guarantee that Bitcoin falls below the 786, but we use the 786 absolutely as we always would, and we say, will there be support there? We always look for that. But the reason we also follow below the 786 is because we have very consistent cycle data that suggests, wow, that was a really heavy opportunity zone for Bitcoin. And kind of zooming out on all these charts, we open up the momentum oscillator. Do not forget it. Do not forget it. Bitcoin is in this area that it has been at in previous bear market lows. There's a lot of fear in the market right now. I would say this is a mental game, and the game plan should be to formulate your plan based on your experiences and based on your goals and your risk tolerance. I'm a YouTuber. I'm not a financial advisor. This isn't financial advice. This is just data that I'm tracking, and it is incredible to me that we are reaching these areas on these charts and that they look so similar to previous times we've visited these areas. So this is what I'm watching right now on the Bitcoin charts. Time will tell what happens, obviously. I think traditional markets, how they open this coming week, is going to have a really big impact on how Bitcoin interacts with this entire area. But amazing to me that Bitcoin is in this general vicinity, and historically what it means is it is the opportunity zone. And so we have to approach that how we find ourselves being comfortable in that environment. So these are my thoughts this Saturday as Bitcoin has breached $20,000 and we continue to track it. For me, though, I'm just kind of like, it's common. It's very common, this move for Bitcoin. I have just a more positive, optimistic, neutral, non-emotional approach to these markets. And it's based on the data. It's based on the roadmap here, because if I didn't have the roadmap, if I didn't have all this other data, I would be kind of zoomed in on this chart and I would be kind of like, this isn't looking good. There's something wrong here. But I zoom out on the charts and I say, no, this is actually quite consistent. And we can continue tracking and monitoring these areas on the Bitcoin chart for ultimate macro opportunity. I appreciate all of you cruising by. Hit the subscribe and like. I'll see you in the next video. God bless.